Many thanks for joining us. This is Business Incorporated live from our studios in Lagos. I am BC Adebayo. On today's show, Standard & Poor's releases 2018 economic growth forecast for South Africa. And Ghana's central bank cuts benchmark interest rate to 18%, plus analyst perspective of the new intra-Africa trade agreement. Well, let's get the show started with the markets here in Africa, where the South African JSE index appears to be returning to winning ways with a 0.74% increase at intraday. Well, it's a different story here in Nigeria, where the all-share index is down 0.07% at midday. The Egyptian index is looking up with almost a 1% gain at intraday, while Nairobi closed down 0.38% on Monday. And at the Middle East, the markets are all bleeding at intraday except the Saudi index, which is up 0.94%. The Abu Dhabi index is down 0.84%, while the Dubai FM has lost 0.84% so far at noon. The Qatar index also slipped 0.21%. And European equities jumped higher in early trade today as concerns over a global trade war eased. Investors are also digesting news that GlaxoSmithKline has agreed with Novartis to buy a 36.5% stake in their consumer healthcare joint venture for $13 billion. Well, let's talk to Daniel Koop from the Frankfurt Stock Exchange for more on these and other happenings at the markets. Many thanks for joining us, Daniel. So Novartis is selling its consumer healthcare unit to GlaxoSmithKline for $13 billion in cash. How important is this deal for both parties, their shares, and the healthcare sector on the counters?
Well, this is actually a very big news here also on the stock. Pharmaceutical company Novartis is leading the with their British rival GlaxoSmithKline in place. Orders from both companies today in Basel and in London. And it's really interesting why this is happening, because it was actually providing very good numbers, but it's that the all of Novartis for the moment to sever the market.
Well, we'll continue the conversation with Daniel in a moment. Well, let's cross over to Wall Street, where the stock futures pointed to a rise at the open on Tuesday, setting the Dow Industrials on track to add to yesterday's gains. Looking at the main benchmarks now, the Dow Jones Industrial Average Futures advanced by 0.6% to 24,332, while the S&P 500 futures added 0.55% at 2,674.25. Nasdaq 100 futures tacked in 0.85% to 6,831. On Monday, the Dow closed higher by 2.8%, notching its third largest point gain in its history, as well as its biggest percentage rise since August 2015. And let's see what's happening in Asia, where stocks closed higher on Tuesday after Wall Street rebounded on the first day of the trading week as China and the U.S. moved to ease trade tensions. The Nikkei 225 jumped 2.65%, closing at 21,317.32. Seoul's Kospi also rose, with the benchmark adding 0.61% to end at 2,452.06, and that was even as the index heavyweight Samsung Electronics slid 0.6%. And in Greater China, the markets also bounced back, and the Hong Kong and Seng index rose 0.79%, finishing at 30,790.83 after pairing steeper gains seen earlier in the day. On the mainland, though, the Shanghai Composite tacked on 1.04%, finishing at 3,166.29, and the Shenzhen Composite rose 2.2% at 1,829.69. Elsewhere, the ASX 200 added 0.72% at 5,832.3 as most sectors posted gains. Well, we're still at the markets, but this time at the commodities segment. And with the population expected to hit 397 million by 2050, Nigeria's infrastructure deficit is estimated to require $30 billion yearly for 10 years to fix. Oil revenues in excess of $80 billion will be needed to meet part of its infrastructure needs by 2020. But the question is, how realistic is this plan? Well, to answer this and more is a research analyst at the financial derivatives company, Pt.1 Ulugbele. Welcome to the program.
Thank you for having me.
Good. So now, if Nigeria needs oil revenues in excess of $80 billion, of course, to meet part of its infrastructure needs by 2020, we know that that would require an oil production of 4 million barrels per day. Looking at this aspiration now, how realistic would you call it?
Okay, so presently, Nigeria's oil production is currently at 1.8 million barrels per day. And we also have a restriction on our exports by the OPEC at a cap of 1.8 million barrels per day. So, however, we have a target to meet by 2020 to boost our reserves to about 40 billion barrels and our production to 4 million barrels per day. With 2 years to go, this is 2018, and we have barely 2 years to go to meet this target. And so it's beginning to look like this target is a tall order. And if we don't improve our investments in the oil and gas sector, really, it would just be an aspiration. But it is very important for Nigeria to try as much as possible to stay on track with this target, because anything can happen in the global oil market and global demand may be hit severely, and we need to hedge against this.
Now, talking about hedging against this now, what about the delay in the passage of the Petroleum Industry Bill? What impact is this likely to have?
Okay, so the Petroleum Industry Bill was introduced in 2012, and it was broken into 4 different tranches, all in a bid to smoothen the passage of the bill. But this is 6 years after, and none of these bills have been signed into law. And so this has reportedly cost Nigeria about $200 billion worth of investment in its oil and gas sector. And it's important to note also that there are other African countries, other African oil-producing countries and so the competition for investment is presently fierce. So Nigeria